Okay, here we are again, and for this episode we're going to be talking about HCG, Home Capital Group. It's a distressed company. Personally, I'm a person that I look for distressed companies. Obviously Scott's always looking for growth companies, so we have varied interests. We still have other ones that we meet in the middle, distressed, and we like growth come dividend stocks or pure dividend stocks, because you like a mix in your portfolio, right?
Sure.
I know you only like growth, but
it's nice to have some stable companies that are still growing.
Yeah.
That maybe a slower growth.
Right.
Carry on.
Yeah. So anyway, Home Capital Group. It's a Canadian company. It's an alternative lender. It is distressed. It's got great assets, and delinquencies on their loans are smaller than the major Canadian banks, the 6 major Canadian banks. Earlier in the year, in May, wasn't looking for this company, hadn't heard of this company, but when I see things come up on my personal radar of distressed companies, which I've bought many in the past, and in future episodes we will be going over some of those, because I don't know why, I look for, sometimes they have got deep problems, but they're not as bad as, especially not as bad as when the media get hold of it. If the media gets hold of it, it's like fantastic, because they will turn that into a spiral, because bad news sells, and they take it down and down and down beyond belief. And then just giving you for instance, right, in May, I looked on my phone and it just said Home Capital loses 65%. Boom, I'm very interested, never heard of them. I'm very interested that day, and I'm straight into the numbers looking to see what the heck is going on here. Well, I find out straight away that Home Capital had a problem in 2015 with 45 brokers that were putting applications in for mortgages, and they weren't correct, and so they dispensed of those people. And anyway, it created a big problem. Short sellers came in.
Mark Hodes,
him and his team, they pushed the pressure onto this company and took the stock down. Anyway, it went down to about $5.06, something like that. Personally, I went in at 6. And I've been in and out. I'm still in it. I feel there's a long way to go. I think in 15, or was it 16, it went up to as high as $53, and then it was 33. It's just been fluctuating all the time. Dividends were fantastic. The book value of this company is I think it's, if I could go even deeper, I mean it's showing at the moment at about $21.60, but I actually think it's probably in between the $19 and $20 book value. So
keep it safe, right?
Keep it safe.
Yeah,
and if it's 19, 20, it's fantastic, because they're at the moment they're trading at $13.60, $13, $14, all around that area. So I feel safe there if anything was to happen. But in light of that, going into June, on comes Warren Buffett, unbeknown to myself. He buys 20% stake in the company. Bang, up the company goes one overnight. $15 or into $20.75, and then it's going all over the place. Short sellers are still all over this company, and they still are. But for me, right, you just got to sit on it, buy the stock and sit on it and ride the waves, because it will go like that. It's been going for 35 years, this company. They've got a new CEO. They've changed their CFO. So they've changed everything about the structure of this company. They've put 5 new people on the board altogether so far, and they're bringing in lots of quality and talent to sort things out. The money's still there. They've lost money in the last quarter. The last quarter was abysmal. How can it be any other? They've had fines to pay to the OSC. It's just been one catastrophe after another. But
I want to add in a few things.
Go on then.
Okay. So just so you guys know, that when it was actually collapsing, we were watching it, and I would always suggest that if you were to see anything like this happen again, because there was a lot of negative about it, right?
Negativity, yeah.
So he's talking about fraud, things like that. Anyway, at the time, nobody's sure. That's why we're seeing such a crash in such a short period of time. Now, when something's tumbling to a point like it is, and you're thinking you're getting a good price, it's hard to find the bottom, because it could go to nothing. You just never know at the time. So at the time we were looking around, and you actually did get it around 6, didn't you?
Yeah,
so
I did get it at 6 bang on.
But not by luck really.
Yeah.
Before anything, we figured out it's a good price. But at the time, you didn't buy all the shares all at once. You just bought a little bit, right?
Yeah.
Not a good idea to try and what they call bottom fishing. As Peter Lynch says of the book that we were referring to, he says, don't try and catch a falling knife, okay? So that means is that if something's falling and you're trying to think, oh, that's the bottom, you're probably going to get burnt. So the best thing, or cut even with a knife, right? But so the best thing to do is let it hit the floor, let it fly around a bit, settle down. Right now, it's at what, 14?
Roughly 1380, 1360 to 14.
So now the dust has kind of settled, the knife is rolled over, it's stopped. Now it'd be a good time to think, is this something that I would like to invest in for the future years? And it's all looking now. Everybody's waiting to see what comes up. Can the new CEO, right?
Yeah, and the next quarter comes up. The last quarter was abysmal, as I just said. The next quarter, but we're only looking at quarters, and people get hung up. You know, you go on some of these like Stockhouse and places like that, where they have sites where people, you know, stock boards,
the bull boards,
the bull boards, and people, you know, obviously there's lots of people out there putting negative comments, but
it's positive as well.
Yeah, and some positive, but there's people trying to drive it down. You've got to sift through it and do your due diligence. But me, I'm just going long now, and I will sit on this stock because they will reinstate their dividends. I truly believe. I've bought many stocks in the past that have discontinued their dividends. Say like this one was stopped in the first part of the year. It was 26 cents a share per quarter. Now it's at 0. But in the future, I believe that this company will reinstate their dividends at some point. It may, you know, when people say, "Oh, it all depends on the next quarter," I read it all the time, you know, because I'm always sifting through information, looking for gems, but they're in there, but you never know which ones they are. So you have to keep continually reading all the time to find the good stuff. But they will reinstate their dividends. What quarter, I don't know. It could be a year, it could be 2 years. But if this stock even ever reaches $28 per share and they reinstate the dividends, it's all gravy. It doesn't get any better.
Well, when they sort themselves out, well, as soon as they start making money again, why wouldn't they, right?
That's right. They've paid all their fines.
And if they're not, you know what? If they're not reinstating the dividends, that could be even better when they start making money, because then they're just growing at a faster rate anyway.
Growing at a faster rate, keeping the money in.
There you go.
Yeah, and they may even do a share buyback and start, and then take the stock up, right?
Absolutely.
And that's what happens.
Who doesn't want that? I'd like that.
Yeah, I know. I'd rather have that
for sure,
because it's not taxable. But there again, if you put it in your TFSA, you won't be taxable.
What's the limit on the TFSA?
I did say 51,000 before, but it's not. It's 52,000. You're allowed to actually put 52,000 into TFSA. I know I'm talking Canadian, right? So I don't know what it is in your country. I'm not quite sure yet, but it is 52,000, not 51 at this moment in time. It changes every January. At the moment, you're allowed to put 5,500 on top of that every time, right? And if you're in, say you've got shares in other companies in your, say like a Canadian account or in any other account, you can actually transfer them up to that value free of charge into your TFSA every January if you want to. Takes it away from the taxman, right? Makes sense? Okay,
makes sense to me. I want to make money. Less to the tax man. It sounds good to me.
And more for me.
More for me.
And more for you. You know. But anyway, I'm just letting you know I'm going long and staying strong on that. You know.
Yeah.
Is that what you say? Has I got that right?
Yeah. Go long, stay strong.
That's the one I was looking for, because I always whatever it is, I always get that one right.
Go long. What do you say? Go long, go strong.
Whatever. Long, strong, whatever. But I always get that one wrong anyway. But anyway. I'm usually a person that goes long, right? I'm not in and out quickly. Some of these stocks I buy, they're 10 years, I've had them. I've bought them in distressed states, and I've ended up with 10 baggers.
10 baggers, as Peter Lynch says.
Yeah.
And the book that we said, there you go.
Yeah, there you go. Right, next week, oh, by the way, if there's anything here that would help you, great, subscribe, and don't forget just one click and it's free of charge. See you next week.